Hey everyone, welcome back to Corporate Decoder. Today, the Hartford Insurance Group Incorporated just announced a new board member, and I'm seeing a few things to unpack. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing might seem small, but it gives us a peek into how the company is structuring its leadership and compensating its directors. Alright, let's dive into what is happening at the Hartford Insurance Group Incorporated on the 11th of August 2026. The big news here is a change in their board of directors. The company's board decided to bring in a new director, Priscilla Almodovar, and this change is set to take effect on the 1st of September 2026. Not only is she joining the board, but she is also being appointed to two important committees, the Finance, Investment and Risk Management Committee and the Audit Committee, also starting on the 1st of September. This tells us they value her expertise in these critical areas. Now, how is Miss Almodovar being compensated for her new role? For the remaining part of the 2026 to 2027 board service year, she'll receive a portion of the standard director pay. The company pays non-management directors a yearly cash retainer of $115,000. Ms. Almodovar will get a prorated amount of $82,700. On top of that, she'll also receive a prorated portion of the equity compensation annual retainer, which is $190,000. This will be given to her in the form of restricted stock units, and they will be valued at $136,600. These restricted stock units will be granted a couple of days after the company files its quarterly report for the 30th of September 2026, and their value will be based on the stock price on that specific grant day. Beyond the direct cash and stock awards, Ms. Almodovar will also be part of the other compensation packages offered to non-management directors. This includes things like $100,000 in group life insurance coverage and $750,000 in accidental death and dismemberment and permanent total disability coverage. Plus, the company will cover all her travel and related expenses when she is working on board business. To make sure everyone is in the loop, the Hartford Insurance Group Incorporated also put out a press release on the 11th of August 2026 to announce these board changes and compensation details. This press release is included as part of this filing. This filing is a standard Form 8K, which is used to announce major events that shareholders should know about. It also includes various exhibits like the press release we just mentioned, and some interactive data files. Looking at the Hartford Insurance Group Incorporated as a whole, it is a significant player in the financial services and insurance industry. With a PPE ratio of 3.4 and a current stock price around $24.46, it appears to be trading at a relatively low valuation compared to its earnings. The company employs a substantial number of people, around 19,200. Recent news suggests a positive outlook for their property and casualty insurance business. With improving margins being noted, this is important because the insurance industry can be cyclical, and strong operational performance is key to weathering economic ups and downs. In terms of leadership changes, bringing in new directors like Ms. Almodovar, especially with her expected experience in finance and audit, can be a positive signal. It shows the company is actively seeking diverse perspectives and expertise to guide its strategy. The compensation structure seems to align with industry norms for directors, combining cash and equity to incentivize long-term performance. One thing to keep an eye on with insurance companies is their ability to manage risk effectively, especially in volatile markets. The fact that Ms. Almodovar is joining the Finance, Investment and Risk Management Committee and the Audit Committee suggests the board is focused on these areas. While this specific filing is focused on a board appointment, it is part of the ongoing narrative of how the Hartford Insurance Group Incorporated is managing its operations and leadership. The company has diverse lines of business, including common stock, notes, and preferred stock, indicating a complex financial structure. The market seems to be pricing in a lot of negativity already, given the low P/E ratio. However, recent analyst sentiment indicating a buy rating suggests that some see value and potential for improvement. The appointment of a new director can sometimes be a catalyst for change or a sign of a company looking to strengthen its governance. What I am actually looking for is how these new board appointments translate into improved strategic decisions and continued financial health, especially as the company navigates the competitive insurance landscape. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video, subscribe for more, and join our Discord community linked in the description.